Hello everyone. Thank you for joining me today. This is Janko speaking. I was waiting for a few more attendees, but I see that currently that's what we have. So let's start with the ones that are attending. So thank you again for joining me and for attending this webinar today. Monday, the beginning of the week, there hasn't been much movement in the last few hours. Unlike last Friday, which was a very, I would say, a very, there was very strong momentum on the market after the news from the European Summit. We'll first make a short market review and then look at the trading system for today, which is called the Symphony trading system. So before starting with the new trading system, which is not very complicated, I'll just take a short or a quick review of the market and show you some things. So you can see the consolidation on during Thursday and Friday at night. You can see here how the price was consolidating just below the this support line, and here the support, and you can see how eventually when it did start to break or to breach this support line and close above it here, I guess it was around this candle, it found support, and then when the news came out, the market took a very sharp move upwards. As for the continuation of this strong move, you can see here. Okay, you can see here around here again this whole area of consolidation. Okay, or support and resistance around here, and then support. Okay, after breaching this resistance line here, then the price moved up after finding support again. I remind you that last week we talked about moving averages, and we spoke about the one of the characteristics of moving averages, which is to serve, of course, as support and resistance. And usually when there are strong moves like this move here, on the euro dollar, pound dollar, Aussie dollar, etc., dollar CAD, all these, I usually look for support around the moving averages. Now, obviously, I don't know exactly which moving average will eventually support, but you can see here the consolidation zone, and then actually there's also one, we can add also the 5 exponential. That's also a potential moving average. Okay, so you know what, I'll save it later, doesn't matter. So for this strong movement here, you can see how the price eventually found support on the 5 moving average or the 9 moving average, and was pushed upwards, and then gave another strong push here. Okay, now here this is on the hourly chart. You can see on the 15-minute chart, just like we spoke yesterday, last week, that okay, we can find the support on lower or longer moving averages, in this case the 26 moving average. Okay, you can see here the support, and again, always look for the support of the moving averages along with support from other areas. Okay, remember what we spoke about, support from previous supports along with support from moving averages gives you stronger support. Okay, so this is a nice example. I can tell you that last year, it was September 6th, I think. let's find it, the Euro Swiss. Yeah, here it is. Okay, last year, if you remember, before the Euro Swiss went flat, it went flat after the Swiss bank, the Swiss central bank intervened and here and declared that it would not let the euro go below 120 against the Swiss. Okay, so it was here, it was around 110, and within minutes it went up around over 1,000 pips. Now, when I saw that, I wasn't in the market at the same time, not on the Euro Swiss or the dollar Swiss, but I knew that if I see such a strong candle, and I know that the Swiss central bank, the SNB, the national bank, gave this pair a glass floor, okay, or an iron floor, it doesn't matter, a floor of 120, then I should expect this pair to move up once reaching around the area of 120, but more than that, once reaching the moving averages. So I was waiting for these moving averages, and here, I'll just remove a few. Was waiting for the fast moving averages, namely the 9 or the 5, okay, and when I saw this here, after it was around 9 days, I waited for about 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, around here. I was waiting, and when I saw this this candle here starting to push up a little bit after these candles, okay, and getting very close to the 9 moving average and already sitting on the 5 moving average, I opened a position, a big position actually. I was risking, I think, most of my account, if not all of it, but I knew that I had the support from the Swiss central bank, okay? So I knew that at least at the beginning, this pair is not going anywhere down. It was going only up, okay? Unlike the euro dollar, which could have gone down all the way, and it happens many times. With the euro Swiss, I knew it couldn't happen because of the central bank. So I just waited about 9 days, and here, around here, I opened a large position, and I knew that this pair was going about almost 400 pips because I was looking at this trend line here. Okay, so I said, okay, let's see after this intervention here. Okay, here. I said I'm entering around this area, okay, and I have a potential move of about, well, here 500 pips, but I was guessing around 400 to 500 pips. I didn't know how long it'll take. Unfortunately, I didn't eventually stay all the way because, as I mentioned, I had a very big trade open, but I did take a very nice amount of money here just from this move. So you see the strength of the moving averages, okay, and how they push the price after giving a strong move. So that's what I was waiting for, and then I entered with a big trade. So this was the Euro Swiss almost a year ago. But again, many times it can happen with currency pairs. Of course, not. You don't have the backup of the central bank in these cases. When it just, although here it was a nice, there was a good sentiment after the summit, and it was quite certain that this pair would go up a little bit higher. So that's to show you the strength of the moving averages. And as for the pound dollar went up just like the euro dollar, but unlike the euro dollar, which went sideways, the pound dollar dropped here and only then continued moving up. And I can tell you, look at this beautiful reversal candle, but actually if you're asking yourselves what stopped the pound dollar from going higher here around this point, well, there were two main resistance areas here. Okay, and I'm not necessarily talking about this resistance, which was support before. I'm talking about these here. Okay, let me show you. So first of all, there was this, where was it? Was it this one? Yeah. Okay, so there was this trend line, at least I had it on my charts. Okay, you can see this trend line, how it serves as support, and then, okay, support here, and then resistance, and another resistance around here. And on Friday, okay, when it reached this trend line again, you see the strong resistance. It immediately dropped, okay, and this drop was about 100 pips. Okay, so you see the strength of just one trend line, and that's why it's important to leave these trend lines sometimes more than for a few days, okay, because you can't know, as long as the price is around the area of the trend line or the support or resistance lines, you should leave them, because you know, if you remove them, you forget about them, and you can never know when the price will react again to these lines. So here was a strong resistance from this trend line, along with resistance too from the pivot lines. Okay, on Friday, on the intraday pivots, here exactly at the same level was there was a resistance too of the pivot lines. So these are things worth mentioning regarding last week, things that you should notice when trading, and the way you can use moving averages after strong movements. Okay, after strong moves of the price. Okay, strong price action. You can always use the moving averages as support or resistance for trend continuation. If you have any questions so far, I'll be happy to answer them. If not, let's review a new trading system here today. It's not anything very special, and you've seen some of the indicators or similar things. Okay, but we'll discuss about it a little bit. Later on this week, by the way, I want to discuss a new trading strategy which actually uses no indicators, and it might take us more than one lesson, not because it's complicated, just because it needs practice, it needs a lot of reviewing, and it has several steps or several things you need to be aware of. So we'll stop with these colorful trading systems and try to focus more on consolidation zones, breakouts. Maybe we'll start also reviewing some indicators in general, and not just all these colorful trading systems. But again, for today, we'll start with this trading system here, and we'll go backwards and see how it did with the recent moves. So this trading strategy is called the Symphony, and it has several indicators. I added actually it has basically 4 indicators: the trend, the extreme indicator, the market emotions, and the market sentiment. Okay, and so there are 4 here, 1 on the chart and 3 here below. And another option is to have them all concentrated in one indicator here. The trend is a little bit different though, but we'll review it from both, or from 2 directions, one from these indicators and one from the other indicator. So basically the symphony trading strategy again uses 4 indicators: the trend, the emotion, the sentiment, and the extreme. And they should all, according to this trading system or strategy, they should all be in agreement. They only you place the orders only when all the indicators line up in the same direction, meaning or all blue or all red. Okay, that's when this strategy gives the best entry points, or the best indications, or the best chances for you to have a profitable trade. And as I said, it has 4 indicators. So the first indicator is the trend line indicator. We saw something like that, or something very similar here. Okay, we saw it in this system, okay, with the trend magic line. If we compare them, okay, you can see actually that it's very, very similar. Okay, you can see here the blue steps, and oh, sorry, you can see here almost the identical blue steps. Okay, so most of you probably already have this trend line indicator. And I remind you that this indicator changes color from red to blue, or from blue to red, according to the trend, and also serves as support or resistance. Okay, so if the trend is a downtrend and the trend line is red and all the indicators are red, you should look for short signals around this trend line, because it can or may be a resistance line. Okay, so entering around this trend line, obviously it's not always perfect, but if you go with the trend, the chances are in favor of your trade. Okay, so entering around the trend line where you also have agreement from all the other indicators, for example here, okay, all turn red. Okay, this candle goes down, goes up a little bit. You have here support line turns to resistance, and you take this this trade. Okay, or for example, let's look here when everything is red. Okay, you have this blue candle and then this red one. Okay, so this blue candle gives you stops here at the trend line. And already at when it closes, all the indicators are red. Okay, it closes below the red trend line, and you can enter around here. Even if you enter around at the end of this candle or somewhere during this candle, you still have a nice move here. Let's say at least 20 pips to the previous bottom, and actually here it gives us even more. Okay, so the trend line as support or resistance, and as a trend indicator according to its color and direction. That's the first one. The second one is the extreme indicator. Okay, it changes colors not very often, as you can see, and it's a lagging indicator, obviously. But you can see how here, for example, okay, even though we're in a downtrend, this market is going sideways, and this indicator is all blue. So while other indicators, at least part of the time, are red. Okay, so you can see that's maybe the slowest indicator, but still, when it's blue, it's for we're looking for long signals if everything else is blue. When it's red, we're looking for short signals when everything else is red. And And the again, the extreme indicator is just one of the indicators. It's just one filter. Okay, it's just one filter, and it has to be in line with the other indicators too. One more thing about the extreme indicator. Okay, you can see here, for example, just let me show you. Okay, you can see that it reaches, or it may change colors. It may change, not always, okay, but it may change color, just like its name, in the extreme points, okay, around the trend line. So you can see here when it reaches the extreme, points here, it may change color. So that also may help you when it changes. Okay, from, let's say, from blue to red, and you're at the extreme of the trend line, just around the trend line itself, it gives you a better indication for the entry point. Okay, now again, only when it's in line with the other indicators. So for example here, from blue to red, and all the rest are also red, and you're very close to the trend line at the extreme, that's a better signal. Okay, you can see here how it turned from blue to red just around the extreme of the price. And for example, around here, again, you can see turning from red to blue just around this trend line. Okay, just around the trend line. So again, look for these reversal points, or reverse change in color in the extreme line, or the extreme indicator, along with support or resistance near the trend line. The market sentiment, the market emotion, okay, again, these are just names, but the market emotion indicator also changes from blue to red, or from red to blue. You see, in not always at the same place as the extreme, otherwise it wouldn't give us, it wouldn't help much if they reacted the same to the price movement. And you can see that, again, sometimes when the extreme indicator changes from red to blue, or vice versa, the market emotion doesn't change, whereas where the extreme doesn't change, sometimes the market the emotion indicator does change. So what you want to have always with this system is all indicators to line up. That's why the system doesn't give many signals, just here and there, once in a while, but good signals. Okay, only when all indicators line up. So the market emotion usually goes with longer trends, okay, or with the general emotion or the general trend. It doesn't necessarily change at extreme points or anything like that. And as long as it's a longer trend, the market emotion keeps its color the same. It doesn't change color much. Okay, and it really shows nice momentum, or nice emotion. And you can see already here. Okay, you can see even when the market went sideways, the emotion above the trend line emotion is still blue. Okay. The last indicator here is the sentiment. Okay. Here, not only does it change from blue to red, or from red to blue, it also changes position. The blue is up, the red is down, but it actually doesn't really matter. I mean, it can be really at the same height or the same line and still show you the same. And again, you can see here it almost acts the same as the other indicators, but sometimes it has some differences. And you can see the direction here. Okay, The direction here also gives us long moves, okay, long sentiments, but it's the most lagging indicator. Okay, you can see it's almost always lagging behind the market sentiment and the market emotion and the market extreme and the market emotions. Okay, so it's the most lagging indicator, but again, according to this trading strategy, you must have all indicators in line, okay, or lining up together to take the signal. Now, in this case, for example, all three indicators are red down here, okay, the extreme, the emotion, and the sentiment, but the trend line is still blue, okay? So according to the rules of the system, there's no go here, okay? There is go around here, okay? I would say in this candle, okay? Just like I showed you before when we spoke about the market, and I showed you that this candle here, okay, that this candle here closed above this resistance line or support line, okay, this candle here just before going up. So we have the same indication from this system here. You see how it as long as it's kept moving below the trend line, it was red, and here it closed just above the trend line, this blue candle, the trend line became blue, and all indicators are also blue. Okay, so at the end of this candle, at the beginning of this candle, even though it's 5 a.m., probably most of you, including myself, wouldn't be trading the euro dollar at this time of the day, and obviously wouldn't expect to have such a strong move from from a summit announcement, but let's say it wasn't that strong of a move. Let's say it was a normal slow upward move. Still, we see here a nice signal to go up with the trend turning from red to blue, and all the indicators are also showing blue already here. Okay. So you can see how beautifully this trend line can also, again, serve as support or resistance. As for the lower indicator, the lower indicator is like a summary in one indicator of the four indicators of the trend line, the extreme line, the emotion, and the sentiment. The only difference is that the trend line is a little bit different. You can see here, for example, that the trend line here already turned red, while here it is still blue. Okay, so there's a little bit of a difference, and actually with this indicator, with this lower indicator, you may have more signals because the trend line here changes more often than the trend line here. You can still use both, okay? You can use this trend line for support and resistance, and the direction of the trend, or looking for agreement from the four indicators, you can use this indicator instead of using these three. Okay, but you can see that the extreme, the emotion, and the sentiment behave exactly the same way. As for the time frame of this system, well, basically you can use any time frame you wish, but if I took here the 1 hour, for example, but you can also use the 15-minute. Okay, you can also use the 15-minute chart if you want to trade shorter time frames. Okay, and again, you can see here how, for example, here all indicators are blue in the lower indicator, while the trend line is still red here. But if you wait even a little bit for a little bit more, you can see here this candle turning the trend line from red to blue. Okay, starting to move up with all other indicators also blue. That's a nice signal to take long, and you can see this beautiful move with this area as consolidation with support from the trend line. Let's look for another area where all indicators line up. Okay, so for example here, around here. Okay, this is a very small move. Okay, and the market is then going sideways. Probably if you entered around here, although it's again not the great the best trading hours for the euro dollar, but if you enter around here, you would probably close in a small profit or break even. Let's take a look at the longer time frames. Okay, so the ones who are trading or who are swing traders and take longer time frames to trade, for example, the 4-hour chart. In this case, you can see really some nice movements. And again, the trend line, you should remember that it does change very slowly. So, for example, this area here where you see an upward move and then coming down, finding support and starting to go up with all indicators lining up in blue, you may say, okay, let's take the chance and ignore the fact that this trend line is red here, whereas here it is already blue. Okay, and take this nice long move here. You see 4 hours. As for the exit rules, okay, let's talk a little bit about the exit rules of this trading strategy. Basically, this trading strategy has three exit rules, or three options to exit according to your aggressiveness. The most conservative exit strategy says that when the extreme indicator changes color, you should exit. Okay, so for example, and again, why the extreme? Because you see that usually it changes, it's the fastest indicator. Okay, usually, not always, but you can see that here it changes first from red to blue, it changes first from blue to red. Okay, again, it changes first from red to blue, and from blue to red it changes the same here. But usually it's the fastest, and again, just like we mentioned before, it shows us extreme points. So for example, here it changed, here it changed a little bit too late maybe, but that's the 4-hour chart. So let's take shorter time frames, because with the 4 hours you may have to wait for a very long time and then have some of your, or a big part of your profit lost on retracements, on big retracements. So let's take the 1-hour chart. Okay, so let's say you took this this downtrend, okay, and we have here this blue blue brick here from, or the extreme changing from red to blue, then probably you would exit around here. Okay, that's the most conservative, telling you to exit when the extreme indicator changes from blue to red or from red to blue. Okay, now sometimes there may be a problem with these indicators when they repaint. Okay, so for example, maybe this here was initially blue and only after a while changed to red, or maybe this was red, or maybe, or here for example, maybe this was red and only afterwards changed to blue. Okay, So sometimes they tend to repaint, although with this version, version 3, they repaint less. But again, for those of you who are conservative, always, first of all, always move your stop loss closer, and be aware of the sentiment of the candle's shape, okay, spikes and things like that. And then you can rely on the indicators. If they change color and you feel that the trend is weakening or reversing, then you can also you can always close the trade or close half of it or some of it and move your stop loss closer. But basically, again, the conservative exit strategy says once the extreme indicator changes color, close your trade. And if you really want, you can wait for 2 or 3 more bars to see if the color does hold. For example, here, if it changes from blue to red, and you wait for 3-4 bars, okay, to see if the color holds, you will see that eventually, yes, the red turns again to blue, and you remain in the trade. Okay, especially as long as the candles are above the trend line in an uptrend or below the trend line in a downtrend. And you can always set your stop loss on the other side of the trend line, okay, of the trend line indicator. For those of you who are a bit more aggressive, you can, again, you don't have to close all the trade. You can close part of the trade when the extreme indicator changes color, or wait for the wait again a few more bars to see if the extreme color changed, if the extreme indicator changed color. But again, with the more aggressive, and even with the moderate, you don't have to close all your trade. You can close some of it and then move your stop loss closer to the recent lows or highs and closer to the trend line. Those of you who are really aggressive, you can always look for or wait for another indicator to change color. I would say even the market economy, because again the sentiment is very slow. But for example, let's say here, okay, you see this red and this is still blue. If this is red and this is blue, you say, okay, I'm still in an uptrend. I'm not going anywhere. I'm not closing my trade. This is red, 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 and only here at the 5th one, it turns blue. It turns red also on the emotion indicator, and then you say, okay, I'm closing. But as long as I'm above the trend line and I have only one indicator, in this case the extreme, in red, but the others show me blue, I'm remaining in the trade. Now obviously again you remain in the trade, but you keep your stop losses closer. Okay, you don't let the trend or the price eat up most of your profits. Okay, so for example here, if you're in a downtrend and you see this, sorry, no, in this case it's I wouldn't go in because it's below the trend line anyway. Okay, let's say you're in a downtrend here. You enter a short trade and you go up and down and up and down a little bit, move sideways. You see here that in this case the sentiment indicator turned blue while the extreme indicator is still red, and here they're both red. Obviously you should close your trade around here, even though the price is still below the trend line, but you have already 2 indicators pointing or showing blue. Okay, so again, it depends on your aggressiveness, or how aggressive you are as traders, or how courageous, or how much you want to try, or how much chance you want to give to the market. But as long as the price is below the trend line, even if the trend line is blue, okay, even if the trend line is for some reason blue, if the price is below it, don't take short. sorry, if the price is below it and the trend line is blue, don't take long positions. If the price is above the trend line, if the price is above the trend line and the trend line is red, don't take shorts. Okay, don't take any short positions. Wait for the price to be in agreement with the trend line itself. If the price is above and the trend line is blue, okay, then look at the other indicators. If the price is below the trend line and the trend line is red, then look at the other indicators. But if the price is above the trend line and the trend line is red, there's nothing to look at. Or vice versa, if the price is below and the trend line is blue, probably you shouldn't look for any signals, unless really you're more aggressive and you want to look at this indicator here below, and you have an agreement. But go with the price and the trend line, okay? Below the trend line, look for short positions. Above the trend line, look for long positions, preferably with the trend line at the same color, okay? So here, for example, it can give you a nice trade, but not a long one, okay? And always be aware not only of the indicators, but also of support and resistance areas and the way the price reacts to them, okay? Here, for example, you already have a warning signal from the emotion indicator turning from blue to red, okay? But even if it remained blue, just like the other indicators, along with the trend line and the extreme and the sentiment, you still have a strong resistance area here, okay? It was support and then resistance, and you reach this resistance again, and you know that generally you're in a downtrend, okay? In this case, you should look for short, or at least not enter long anywhere around here. And if you're already in the long position, okay, let's say you entered at the end of this candle or somewhere here, just at the trend line, which served as nice support, and you reached here, be prepared to close out or move your stop losses much closer, because of this strong resistance along with the general downtrend. So this is the symphony trading strategy. Okay, obviously you can apply it to most currency pairs. Okay, the pound dollar and the dollar yen and the dollar Swiss and all these majors and minors. And you can always try to look, if you trade commodities or indices, you can always check the system for other trading instruments. For example, with the gold, okay, you can see that it also works nicely. Just bear in mind that the gold is, of course, much more choppy and violent, and you have to be more cautious. For example, here, okay, look at these spikes all over. Here spikes and big candles that may really take you out of the trade, even if you're in the direction of the trend. Okay, so be careful with these I would say choppy instruments or violent instruments. Okay, they may be very dangerous, especially for those of you who keep close stop losses. Let's look at the S&P here. Okay. Okay, so you can see here with the S&P also some very, very nice moves. And here, for example, that's a beautiful uptrend. Okay, beautiful uptrend, and look how most indicators keep their indication as blue or red, and you can keep their indication in line with the trend, you can see that the extreme line, the extreme indicator that we discussed earlier, saying that it's the fastest or changing more often than other indicators, you can see here that it gave you some false signals. So again, for the conservative ones, if you close out your trade here, okay, if you close out your trade here, you will lose some of the trend continuation. For those of you who are more conservative and know that, okay, you see that every indicators are still blue, the price going up and remaining red, those who are more aggressive may really enjoy the rest of the move and not be taken out by early signs from the extreme indicator. But again, sometimes it's better to be safe than sorry, so it's really up to you as a trader how much confidence you have in your analysis, in your feelings, in your guts, and in the market momentum. So this is the Symphony trading strategy. Obviously, for those of you who want to have this template and these indicators, you can always send me an email to yanko.fx@gmail.com, and I'll send you these indicators. We've seen so far many systems, and again, some of them were very similar with the multi-time frame, with the Heikin-Ashi. And by the way, you can always use Heikin-Ashi in this trading strategy too. Okay, just before I sum it up, you can always use Heikin-Ashi instead of the regular candles to also help you filter out some of the noises. Okay, and if you want to make this clothesline disappear, you can always change the line graph to none. Okay, so you can use Heikin-Ashi to filter out some of the, I would say, distracting candles or noisy candles. Okay, and of course, if you use Heikin-Ashi, remember that they change a little bit, or they change a little bit late. They're also lagging. Okay, that's a lagging indicator, the Heikin-Ashi. So be aware of the shape of the candles, okay, and of the wicks. So for example, here we had in the regular candles, we had 1, 2, 3 red candles, okay, before the sharp drop. Okay, you can see here these red candles behind the Japanese candles, red, 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 whereas with the Heikin-Ashi, we have only 1 red candle before the drop, okay? We have these two remain blue because of the averaging characteristics of the Heikin-Ashi, but here, if you remain in the trade, okay, although the market emotion is already showing you 1, 2, 3 red bars, okay, if you still remain in the trade, obviously this candle here, this red Heikin-Ashi dodgy or spinning top candle gives you the warning sign, and you shouldn't, you should either move your stop loss really just below this candle or close out your trade, because just like we mentioned last week, these are typical reversal candles or reversal Heikin-Ashi candles. Okay, they show hesitation, they show potential, reversal potential. Okay, I mean, I'm talking about extreme points. Okay, not here, for example, we have almost all in blue, 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 and although this may be a reversal candle, okay, so even here, I would probably, if I were more conservative, I would probably close my trade, especially after this red candle, because again, you never know if the trend is going to pull back or reverse. So here I would probably close, and somewhere around here maybe reopen again after getting more, a bigger body here, and the trend is starting to move up again with this trend line. Okay, so, and even if not, okay, so you took part of this nice trend, and you see here all these blue Heikin Ashi candles and this one, so it already gives you a nice move here. So remember, Heikin Ashi is something that can also help you with the rest of the indicators and the colors. So again, all these systems, most of the systems we've seen so far had many indicators, multiple indicators. Some of them were multi-time frame indicators. Some of them were on the chart itself, like Heikin Ashi, and some moving averages. Some were below, like the ADX. We talked a little bit about it. Maybe we'll talk about it one day again. And the stochastic and the MACD with the divergences I've shown you. Tomorrow evening, it'll be a bit. The class tomorrow will be a little bit shorter because about 45 minutes. I have to leave a little bit earlier, but it will. I will start talking about a trading strategy, which is based mostly on consolidation zones. And maybe some of you have seen traders using these square zones or cubes on the chart, looking for marking consolidation zones with cubes, and then waiting for these consolidation zones to show breakout, or the price to break out of these consolidation zones. So we'll start talking about it tomorrow. It's basically very simple because there are no indicators there. It's just waiting for a consolidation zone and then waiting for a breakout. But as simple as it may sound, it may look more complicated to you because it doesn't feed you with all these with all these colors and with all these special indicators that show you, okay, if everything is blue, go long. If everything is red, go short. It requires obviously more patience. It requires you to train with your eyes and look for these consolidation zones and mark them before you can recognize a breakout from the zone. Okay, you have to define this zone. And we'll try to start working a little bit more on, feeling the charts, waiting for the good setups. Okay, I think patience, like they say, patience is a trader's virtue, and you have to be patient with all these trading strategies, but with some of them you can also be allegedly dumb. Okay, you don't have to be very smart because, okay, if everything is red, it's short. If everything is blue, it's long. But there are many times there are false signals, or I don't know if false signals, but the systems sometimes may give you many false trades, or you may enter in areas where you may find yourselves losing more than making profit. So we'll talk about this breakout strategy tomorrow. Start talking about it tomorrow because, again, it has several steps. And I think in the next few weeks we'll also start talking about just other indicators, or even these regular indicators we have in MetaTrader, but look at them differently, or explore them a little bit more thoroughly, so you can build your own arsenal, or your own toolbox, or to use whatever you want and not what the indicators or these built-in trading strategies give you. So this is it for today. Again, be patient with the market. It looks like it's still looking for direction, and so far it's been kind of going sideways today. Not very sideways. I mean, a little bit up, a little bit down. But as you can see on the 1-hour chart, it although it's an uptrend now, at least in the 1-hour chart, it's been going up and down, and we'll have to wait and see the general movement, whether the euro dollar does manage to continue the upward movement with this long bullish candle after last week. You can see here on the weekly chart, it's very, very choppy. There's no clear direction at the moment, okay? But obviously you're not trading the weekly chart, so those of you who are taking short trades, just be careful from fast reversals. Thank you very much for attending today, and I'll see you tomorrow evening and on Wednesday morning. So thank you for attending, thank you for listening, and those of you who wish to send me emails with requests for indicators, not for trading signals or trading advice, but for indicators or things like that, please feel free to send it to me. Thank you, and have a good week and good luck.